Marcus is a 41-year-old electrician in Hamilton. He had a rough stretch, slow contracts, a separation, a move. He did not file his 2022 or 2023 tax returns. He figured he owed about $8,000 and kept meaning to deal with it. Then his sister mentioned something at dinner that stopped him cold. CRA had been charging him interest since April 30th, 2023, not from whenever he got around to filing, from the day the money was originally due. Marcus assumed that if he had not filed, the clock had not started. He was wrong. Here's the rule most Canadians do not know. Under the Income Tax Act, interest on unpaid tax begins accruing from your balance due day. That is April 30th for most people. If you are self-employed, your filing deadline is June 15th, but your balance due day is still April 30th. CRA charges compound daily interest on overdue amounts at the prescribed rate. As of the most recent quarter, that rate sets at 10% on amounts owed to CRA. 10%, compounded daily. The interest starts whether you have filed or not. Now, here's the penalty, and this surprises everyone because most people think interest and penalty are the same thing. They are not. The late filing penalty is a completely separate charge. 5% of your unpaid balance at the filing deadline, plus 1% for each additional full month you are late, up to 12 months. On Marcus's $8,000, that's 5%, $400, plus 12 months at 1%, another $960. Total penalty, $1,360. Add 30 months of compound interest at 10%, approximately $2,200, and Marcus owes $3,560 in charges on top of his original $8,000, a 44% surcharge for doing nothing. Here's the part that most people never know until it's too late. You do not have to wait until you file your return to send CRA money. You can make a voluntary payment on account, money earmarked for a specific tax year, even before the return is filed. Do it through CRA My Account or through your bank bill payment using your social insurance number as the account number and selecting the correct tax year. The payment gets credited and reduces the balance on which interest accumulates from that day forward. Had Marcus sent CRA $8,000 on May 1st, 2023, even without filing, his interest charges would have dropped to nearly nothing. He would still owe the late filing penalty for not getting the return in, but the $2,200 in interest, most of it disappears. The difference between doing nothing and sending a payment without filing is $2,200 in Marcus's case. That's a 15-minute task online. That's the cost of not knowing it existed. And if you are years behind, two more tools exist. The Voluntary Disclosures Program lets you come forward before CRA contacts you, potentially wiping out penalties. Taxpayer relief through Form RC 4288 covers genuine hardship, serious illness, natural disaster, financial crisis. Both programs require you to act first. Once CRA contacts you, most doors close. Here's what to do this week. Step 1. Log into CRA My Account and look at your actual balance. Your tax slips, your assessment history, and your balance owing are all visible there. The real number is almost always less terrifying than the one you've been imagining. Step 2. Make a payment on account today, even a partial one. Every dollar you send stops accumulating 10% interest from that moment forward. Step 3. File the return. Even if you cannot pay the full balance, filing stops the late filing penalty from growing. You can arrange a payment plan with CRA after the fact. Step 4. If you are multiple years behind or experienced genuine hardship, talk to a tax professional about the VDP and RC 4288 before doing anything. April 30th is 16 days away. The interest on your balance has been running since the due date, not since today. A payment made this week cuts the clock. Filing this week stops the penalty.